Hello and welcome back once again to Southbank Live, episode 41, which will be featuring Charlie Morris. We were going to have David Murren on this week, but sadly David couldn't make it. But we now have Charlie Morris standing in his stead, and it's certainly no shortage because Charlie is just back from a very interesting trip in Switzerland, which he'll be able to tell us all about. A little bit of housekeeping just before we get started, as ever. Thanks to everybody who has joined us live. It is great to do these live on YouTube every week and indeed on LinkedIn. Just before we get started, there will be no financial advice in this show as ever. This is for informational and hopefully entertainment purposes only. This is mostly just for discussing some broad themes in the markets. Now, Charlie, thanks for joining me. I hope you're having a good evening. Tell us a bit about where you've been at the minute.
I can't believe that you've replaced me with for David Murren.
Well, it's very nice of you to stand in his stead, Charlie, at such short notice.
Well, where I've been, I've just come back from Zurich yesterday, and today I'm in Wales. And yesterday I was ringing the bell at the stock exchange to launch my Bold ETF, which has been 18 months in the planning, so that was quite a lot of fun. And I'm back, and it's lovely to be in Tenby, Wales. And my wife's going to join me tomorrow. We're going to have a nice weekend.
It sounds like a very nice weekend you've got planned out there. I am in Cardiff, so it's good for us to both be in the same country for once in a while.
Do we do it in Welsh?
Yeah. No, I far too many consonants for me. I really can't get it. Maybe you, Charlie.
Lloyd's Bank.
Yeah, I think that's about the limit of both of our Welsh at the minute. Maybe somebody in the chat could give us something like a crash course. Just to start off with, Charlie, with this trip to Switzerland, this is a very big event with you ringing the bell there. Can you tell us a little bit more about what that was all about?
So it occurred to me, I mean, I appreciate not everyone here is a Fleet Street letter reader. So for the Fleet Street letter readers will know all about it, and I thank their patience because I've been boring them with this for some time. But basically, there's a sort of analytical framework that we employ called the money map, and that looks at inflation and deflation assets, and it looks at risk on and risk off. You know, when markets are happy and when they're unhappy. And you know, the traditional 60-40 portfolio, which is bonds and equities, kind of enjoys low inflation, and that's one of the reasons why it's done so well over 2 or 3 decades. And you know, but what happens when you're in inflation? And I think that an alternative is to think about what could you do off grid, which is not part of the traditional financial system. And of course, you find out assets that don't pay a yield, and that's by design, because if they paid a yield, they'd be on grid. And you know, the classic would be gold, because that's a timeless store of value, and then the newcomer is Bitcoin. And my take is that both of them quite like inflation, and you know, gold does well when the world's going to hell in a handbasket, and Bitcoin does well when the stock market's pretty rosy. Obviously, Bitcoin's really risky, and gold's really calm, and so you balance them accordingly. And so using a bit of financial jargon, so block your ears if you don't want to understand, but inverse volatility, 360-day realized volatility, you end up with something like 82% in gold, 18% in Bitcoin, and you rebalance your portfolio once a month. If you do that, you have a great outcome in an inflation environment.
And this is something that you packaged together into a product, into an exchange-traded product, no less, and you managed to list it in Switzerland, right?
That's right. I'd have loved to have listed it in London, but you can't legally do that today, because although Rishi Sunak has said that crypto UK is a crypto hub, in practice you can't launch products, and the Financial Conduct Authority won't allow them to be sold to retail investors. So you know, as always, if you're rich, you can pick up the phone to your broker and say, buy me the Bold fund in Switzerland, and they will go, yes sir, and do it. But if you call Hargreaves Lansdown or one of these platforms, they'll say, sorry, it's not our platform because the FCA won't allow it. So you know, one rule for them, one rule for us.
Right. What currency is it listed in over in Switzerland? Is it just francs, or is there sterling, or?
What do you want it to be? It's in pounds, it's in Swiss francs, it's in US dollars, and it's in euros.
All right, so it's something for everyone. If folks would be interested in investing in that, like, tell me a bit about why Switzerland. So is this because Switzerland's one of the only place that would allow such a product to exist, Like how many crypto havens are there for this kind of product?
Switzerland's the most crypto-friendly hub in the world, and their regulation is way ahead of the curve. And as a result, lots and lots of things are happening there. And indeed, many of the crypto foundations are headquartered in Zug. But this product's actually headquartered in Zurich. And so the cantons in Switzerland have slightly different rules and slightly different implications. But the whole country is really crypto-friendly. And it's not that they want the Wild West in Switzerland at all. They just want to, be an acceptable, friendly jurisdiction for what they clearly see as the future. Now, one understands that crypto is the Wild West, and that point doesn't need to be made, because it's obvious it is the Wild, but it's real. We've gone way past that whole sort of Ponzi scheme, a pyramid scheme kind of thing. I mean, some people still think that. I was speaking at a conference at lunchtime today in Chepstow in Wales, which is why I'm in Wales. And we had a financial audience of about 100 people, and about 8% still thought it was a sort of Ponzi scheme, pyramid scheme, not interested. But increasingly, that number comes down and down and down when you do these talks, and more people recognize it's here to stay. I just want to make one simple point, and that was back in 1999 when the internet stocks went through the roof. The internet was terrible. It didn't work. There was no useful website on earth, but people saw the vision of where it was going to go. And the doubters at the time, just said it does naughty things like pornography and how to make a bomb and those sorts of things. But within a few years, you started to see real applications, and then you started to see profitable companies come through. Google surprised everyone with just quite how much money it made and how quickly it made it. And now government services are all over the internet. So the idea that the internet should be banned, which was a widely held view in the late 90s, I don't think anyone thinks that today. So the crypto is going to follow the same path. Wild West today. 20,000 tokens, 99.9% of them are worth zero, but a few of them will be great organizations of the future. I didn't say companies, but organizations and networks. And that's one of those interesting things that perhaps we'll get time to discuss, but I don't think we're going to have a crypto conversation tonight. You just asked me what I was doing in Zurich, so off I went.
No. That was exactly the kind of path I was hoping you would go down. A good evening to everybody in the chat as well. Is great to see everybody. Andrew says, hi Boaz, hi Charlie. Grenadiers are cool. Cold War Submariner. Well, it's great to hear that you're a fan of the Grenadier Guards. Andrew, might you happen to be a Cold War Submariner yourself? Or maybe this is a reference to Charlie's watch, which I believe is a Rolex Submariner. That he's got on there. Maybe Andrew will respond to us. Evening to AJ and David and Andrew, Barry and Natalia. It is great for everybody to be here, and Alfred for that matter. Just to start us off, Charlie, we generally have a bit of a light-hearted note at the beginning, which is our long-short segment, which we just taking a look at markets and news over the past week. We give a long and a short based on something that we've seen. Do you have a long and short for us this evening, or have I asked you here on too short notice?
I don't know what you're talking about, Boaz.
Well, for example, for the long-short segment this week, I would probably be long your Bold fund because, of course, it is great to see such great news coming out. And for the short, I imagine it would probably be fiat currencies at the minute because of...
an investment idea, long and short investment idea.
Yeah.
Yeah, that's easy. Well, long Bold, I mean, you said that, so thank you. It would be wrong for me to say that. Bitcoin and gold, why not? Short, I'd be short old tech. And I suppose we're going to talk about Tesla, aren't we? We're going to come to that.
Yes, we certainly will.
I think the stuff that went crazy in Q4, Q3, Q4, Q1 2 years ago or a year and a half ago, the sort of lockdown stocks, the digital lockdown stocks.
Yep.
Those guys are in real trouble, and a lot of those business models may not exist. So, one of the things I want to come on to is this idea of negative leadership in the market.
Yeah, a very interesting theme, and we've got a chart as well for that, which I hope you could tell us a little bit about. Charlie, you featured this recently in ByteTree. Could you tell us what we're looking at here?
Well, it's going in the Fleet Street letter tomorrow, so for Tuesday publication, and it's basically it's a bit confusing. So just bear with me a moment, but But what we're going to do is look at this. Imagine we look at the stock market today and say, what's the stuff that's gone down over the last year, and what's the stuff that's gone up over the last year, and say, well, let's go forward with that and assume it continues. The blue line are the winners, the historic winners, the stuff that's already gone up. You start to buy them, and in a momentum environment, they keep on going up, and they do quite well. And the blue line is the stuff that's done badly in the last year, and not necessarily went down, but didn't do as well as everything else. And over time, the jaws sort of opened up a bit. Now, on this particular measure, the JP Morgan indices, you don't really see the jaws open up over time because the way they constructed the index is very theoretical, not how you would implement an investment strategy. But we'll park that for the second. But it's kind of factual in how the market actually behaves. And when the red line is going down, you've got negative leadership. In other words, stocks, a bunch of stocks that have already done badly, doing really badly in the future. When the blue line's going up aggressively, then you've got the existing leadership doing very, very well indeed. So you had that in 2020, for example. There was a clear leadership in the internet stocks, and off they went. They absolutely roofed it. But now we've got negative leadership, and so the point is, and you don't mind pulling that chart back, please. So we can just go back to 2007, right? The red line starts going down a long time before, a year before the blue line goes down. That's because this idea picked up that there was something bad in the world, and in that case, it was banks. Yeah. And then in 2015, the red line started going down a long time before the blue line started going down.
Yep.
And it picked up the problem with the commodities and the emerging markets. And recently, it's now picking up the whole kind of unwind of the COVID lockdown trade, which generally it's kind of tech related, but it might be some alternative energy stocks, some energy technology stocks. It might be some internet stocks that aren't very serious. For example, here in Britain, we've got things like Moonpig that came to market, and Deliveroo and stuff like that. It's not proper investment, and these things are just and Peloton's another famous one. And these things are all doing very badly. So you've got negative leadership, which kind of forewarns of a bear market. And so that's really the story here.
Very interesting. And it is very interesting when you see those past periods of 2007, 2000, and 2015, where you get that negative leadership dynamic. Is it something that you've seen other market observers pick up on, Charlie? Or is this something that you've taken interest in for some time?
Oh, I've been studying momentum since about 2001, so it's kind of my thing. Now, look, I've seen the notes coming through. Sorry about the sound. I'm in Wales. What do you want me to do? I mean, I could go to England, but it's a bit late now because I can't travel. So I'm in Wales. I'm sorry. We tried the hotel. It's my mobile phone 4G is better, so it is what it is.
Well, Charlie, tell you what, to everybody in the chat, apologies that the sound is a bit tricky. Charlie, let's try it once more. If you close this connection and then reopen it again, and maybe that'll reset it. Yeah, there we are, folks. Hopefully, Charlie will come back soon, and we haven't just lost him in the wilderness of Wales. Speaking to everybody who is tuning into this live, it would be great to hear your long and short for this week. If there's anything you've seen take place in the markets or in the news that makes you particularly bullish or bearish on one thing or another. Charlie, you're back. Let's hear. Yeah, that sounds clearer. That sounds good. Yeah, Charlie. On that note, with negative momentum, where do you think it's going to go next? What do you think we might see take place in the near future now that dynamic is playing out?
Well, I think it spreads. I mean, so when you've got a positive leadership, the good news spreads. When you've got a negative leadership, the bad news spreads. I don't exactly know where it's going to go because I've never been a great forecaster, but I've always been a good interpretator of what's happening and being able to extrapolate out, new trends. So, I've been writing this Fleet Street letter for 6 years now, and I've never had a price target for me or a date of when this is going to happen. Just this is the direction of travel, and this is where we want to be, and that kind of thing. So, I just think the bad news is going to spread. And we've seen Netflix go.
Yep.
We've seen Facebook go. That was a few months ago or a couple of months ago. And, Google disappointed on the YouTube. I mean, that's the YouTube thing's really interesting because that's a digital advertising platform. So they make money from us watching all this, videos like this for free. But up comes an advert. Now, when did you ever see an advert from a traditional advertiser such as Procter and Gamble, Unilever, with a washing up liquid, Cola or Colgate or Heinz ketchup? These guys who are all over our televisions, and you don't. All of it's startup, all of it's young, dynamic, buy crypto or it's buy this sort of new bed that's amazing, which is
right mattresses,
right, all part of the capital cycle. So if you unwind the capital cycle, then a lot of that money raised is a simple website, simple idea, loads of marketing budget. When you make a movie, you raise $100 million to make some big Hollywood blockbuster. Half of it's on the actors and the film set, and the other half is on marketing.
Yep.
And the capital cycle goes straight back to digital advertising, and that the rates are too high because it's all VC funded stuff that's there, and the traditional advertisers aren't. They don't see the value in that kind of pricing model. So I think that a capital cycle will have a negative feedback loop to the dot-coms. And notwithstanding they're great companies and all the rest of it long term, but they're highly priced, we know that, and their revenue's under pressure.
Is it the
Netflix? Sorry, that was the obvious one, yeah.
Right. Is it the inflationary pressure that's driving this dynamic, or higher debt servicing costs, or a combination of everything?
Combination of everything. I mean, it's the lockdown was a boon for the internet. Obviously, we had nothing else to do, so that the internet was great, and now we have other things to do. I mean, I wouldn't be in Tenby, Wales if we're in lockdown, for example. So that's a few hours of internet that I'm not going to be enjoying over the next few days that I would have been during lockdown. There's one example. Multiply that by several billion people, and there's one answer. I've given the answer about the capital cycle. Then we've got the higher rates where whatever profits you do have aren't as valuable as they would have been if the rates remained low, because ultimately there's a discount rate, so it's a bit like the bond market's falling, therefore the present value of future cash flows is falling. So that puts downward pressure on share prices, particularly long-term extrapolated share prices, future profits, all that kind of stuff. So and there's a good old-fashioned recession because inflation is hurting people's pockets, and energy bills have gone up and all that. So there's less discretionary income for the typical person, and that's tough. So we've had the good times.
So where does one invest during the bad times, Charlie?
Well, I think your first thing is to get your head around the idea your expectations should be much lower. It's not a time to be making money. It's a time to be protecting yourself and to tread water in real terms. So you want to make a little bit of money in terms of GDP, but you want to take less risk and just try and survive until the opportunity comes. So that's a really good thing to do, because when the opportunity comes, you make a lot of money very quickly, right? So if I say to you, you can make no money for 1 year, but then you can make loads of money. Or you can lose lots of your money and then hopefully recover some. What would you prefer?
Right.
There just aren't any opportunities right now. And protection is in part diversification. Now, the reason for that is because no one knows. I don't know if, I say the dollar's going up, great. So the Fleet Letter has some dollars. Do I know the dollar's going to keep going up for the rest of the year? I don't know that. So we have some dollars, not all dollars. If I knew that, I'd say, right, all dollars. I don't know that. And gold's pretty interesting as well, because that's another way to protect yourself. Is it flying in dollars? No, but it's doing fine in GBP because the pound's falling against the dollar, but the gold's holding its own. So that's fine. Crypto, we'll come back to that. We've done that, but we can come back to that at this time. But and then value stocks. very simple stuff, the sort of unfashionable stocks that haven't worked for a long time. And every week I scan the stock market and looking for these sorts of things and where to put money. And, I haven't found anything I want to recommend in the last couple of months, but, the things that have gone into the Fleet Street letter in recent months have done pretty well. And I will keep looking for those ideas. And when I find one, then I'll recommend it. But the issue is there's lots of things you can say, okay, that's fine. But I won't put money, Unilever, a good example. I won't put money somewhere just because it's fine. I'd much rather do nothing than it's got to have a case to go up, or what's the point? Why would you bother risking money unless you actually stand a reasonable chance of making a return? Sometimes it doesn't work out, and we've had a few stocks that haven't worked out. But provided on balance, you have some really good winners occasionally. Your hit rate's fairly good, and then the odd thing that doesn't work, then overall you're fine.
Yeah. There's a lot of interesting avenues we could go down with that and what to do in an inflationary environment that we're now in. What's something, Charlie, that you think investors have forgotten because they're not used to these forces? They weren't investing back when inflation was such a strong trend. Because folks who've been investing in emerging markets are familiar with this. But if you've been in the developed world and you've just been focusing on that, it's something that people aren't really used to.
Well, the emerging market is a good point. So if you lived in an emerging market in the last 20 years or whatever, there were some good times. For example, 2002, 2000 to 2000, end of 2007, their domestic markets were way superior to the developed world. And they had a bit of a bounce back into 2010. But then since then, they've actually, in aggregate, done pretty badly. And there hasn't really been a single standout emerging market. There have been things within emerging markets like emerging market internet that's done well. But even that's collapsed over the last year. So there hasn't really been a single hiding place in emerging markets in the last decade, I'd say. So what have they been doing? They've been buying our markets. So we've had capital inflows from their world to our world. But that's kind of peaked, certainly for US equities anyway. So you kind of wonder where that next safe haven is. And the answer is what I've just told you, crypto, gold, value stocks, that sort of thing. But I think that if you are an emerging market investor, and you've had that high inflation, you've had that obvious exit route, just put your money in the West. Yeah, yep. Absolutely fine. But now the West is facing the same issues that they've been facing all this time. Yep. What do we do? And it may be, and I think this is right, that we'll be sending capital back to them outside of the safe havens, gold, Bitcoin. We will be sending money back to them because their stock markets are cheap. They offer value. Now, we've hit a wall with that in places like Russia. India's not cheap. Brazil, very close to the commodity cycle. But, if you pick and choose around the world in aggregate, you're going to get a better deal out of emerging markets than you are in developed. Now, I haven't made the call on EM yet. In fact, I withdrew last year. We sold the emerging market internets, and luckily we sold Russia in late October. So that was quite good. But I haven't been that impressed because the dollar's going up. And when the dollar's going up, that sucks money out of the world. And that's just terrible for financial markets. And the dollar's in a strong bull market now. So you wait to peak dollar, then you start thinking about which emerging markets could do well. But I suspect it's going to be places like the Philippines and Thailand and possibly Turkey, although that's a bit of a controversial one. But these sorts of places which are kind of outside of the line of fire, somewhere between our way of thinking and Russia's way of thinking, and I think it's going to be some great opportunities there. And we could see a 10-year bull market in emerging markets, simply because it's their time.
Very interesting indeed. We are getting a few complaints from the chat about your sound once again, Charlie.
I'm off.
Right. Okay. I shall ad lib for a little while. Hopefully, Charlie will come back shortly before he's vanishes into the wilderness of Wales. Oh, Andrew in the chat was a submariner back during the Cold War. Very cool indeed, Andrew. I noticed recently that there is currently a British, an American, and a French submarine in Faz Lane at the minute, which is quite a collaboration. Charlie, let's give the sound another go.
Testing, Baz.
Yeah, perfect indeed. Now, Charlie,
it drops off. It's got a half-life.
Yeah, I know. It's like we need to keep doing this every 10 minutes or something. Maybe there's a secret. Maybe there's somebody in Wales who's just really likes using the internet nearby every 10 minutes or something. Yeah, we'll find out. We'll find out, I think, over the course of this episode. Charlie, with Tesla and Elon Musk, this features very well with our discussion on tech, where we are in the capital cycle. Loads of money getting thrown at things with the hope that there will be a positive return a long time in the future. What is your take on how the market is treating Tesla in general? And then we can get on to the whole Twitter thing.
Tesla is, I've come round to Elon Musk. 2 or 3 years ago, I just thought he was a big fraudster. And I actually quite like him now. He's quite funny and he's clearly a great innovator. So, one gives him a huge respect for that. But the thing I didn't like about him was the way he just flouted the rules. And I've been in financial markets 25 years, and I've always taken regulatory obligations extremely seriously. And so when someone comes along and just starts making stuff up on Twitter and flouting the rules and saying, oh, well, I've got some fully offered bid from the Saudi Arabians 3 years ago, or what have you. It was all made up, clearly. And he's a great market manipulator. And Tesla came into the stock market, into the S&P 500, 5 or 6 years after it was floated, because they had a rule in the S&P that it couldn't cut. You have to be profitable, and had this sort of profit. It suddenly made a profit. It was a sort of fake profit with some government subsidies and so forth. But he owned 20% of the stock, and other investors, long-term investors, had big chunks of the stock. And suddenly, it's the technical term, the biggest gamma squeeze in history. Basically, more forced buyers than sellers of stock. And Tesla stock is just worth multiples of what it probably is. The price of Tesla is multiples of its fair value. And its fair value, who knows what it is, because I was just talking to someone yesterday who says, no, it's not a car company. This is someone in Switzerland. It's a data company, Charlie. It's a data company. I don't know if I can say, but is it fuck? It's a car company. It's a car company. It makes cars. And for Tesla to be worth the same as, half of all the world's car companies, the same as all the rest of the car companies put together, sort of thing, is absurd. And the idea they can't fight back is just not correct. They will fight back. And I don't think any data he's collected in the last 5 or 6 years is insurmountable to others to collect, whatever that data happens to be, something to do with the roads or driverless. And, and I think that EVs will not hit 100% penetration. I think regulations and anticipations in the UK, for example, will change. The idea of getting ICE off the streets is laughable by 2030. So it's the fundamental problem with electric vehicle, and I know this from my father-in-law, who's a motoring enthusiast and has built his own electric car. It's a bit of it's a high-performance hybrid electric thing. It goes like shit off a shovel, and 0-60 and 2.6, that sort of thing, and it's got a 2-liter Toyota constant velocity petrol engine in the boot, and it's got a 100 kilogram battery in the passenger seat.
Nice.
Yeah. So you charge the battery, and the battery, you get the torque from the battery. So you get the performance of electric, but you get the power generation from petrol, right? Best of both worlds. Right. This thing performs. I mean, it's absolutely glorious. But the real problem, the reason he's done that is because 100 kilos is basically a passenger there or thereabouts. It balances it. And well, if it's me, maybe it's not, it's you. But so the car's balanced. But if you had the whole thing battery, you'd be talking 2 tons, 1.5 tons, 2 tons,
right?
Sort of thing, to get enough power to do the job of what his little tank of petrol. And I think the power to weight ratio of a tank of petrol is 100 to 1 of weight of battery.
Okay.
So the whole point of efficiency is that you've got lightweight, long distance. And batteries are fundamentally heavy. You're never going to change that. No technology is going to change the fact that they're really, really heavy. So the EV is, probably well designed for short distances, well designed for air quality in cities and that sort of thing. I really like it for that. But that's not 100% penetration. That is 30, 40% penetration. at the market. So I think it's wrong to assume the EV is going to win the entire battle over time.
Yeah, there is a comment here in the chat. Steve says that he's heard that Elon Musk is in Tenby this weekend. If he is, Charlie, perhaps you can connect him with your father-in-law, because it sounds like that chap has quite a lot of technical expertise.
I would love to take Elon Musk out in Tenby. It'd just be hilarious, wouldn't it? I mean, he just sounds like such a character.
I can't imagine it. It's it's beyond me, I think.
So
On the topic of
85 followers, and I'd have 6,000, but whatever.
Well, and indeed, in the chat, credit to the father-in-law from Natalia there. Yeah, it is very interesting to hear that you have such a. Have you had a go in this car? This 0 to 60 in 2.6 seconds, Charlie?
I've been in it's the 14th prototype, I think. I think it's 14. But I haven't been in all of them, but I've been in 2 or 3 of the petrol versions. But this particular one sits in some lab somewhere.
Is this? Are they going to start rolling them out? Commercial production and everything?
No. I think he's been talking about it for 15 years of commercially producing, but the next model is always the one. I don't think the model will ever that is produced will ever be the model he's happy with will ever be produced. This is a retirement hobby. I think it's an expensive retirement hobby, and by the way, this car doesn't have a roof, doesn't have doors, it doesn't need boot space, so it's purely motoring.
Right. Like, is this one of these cars that you can only drive on the track? You could never take it on the public roads?
No, it's roadworthy, absolutely roadworthy. Looks fantastic. I'll send a picture.
Yeah, that'd be great.
I won't do it now. It took me 5 minutes to find it, but looks absolutely beautiful. But it's just completely unrealistic. The idea was going to be mass produced. I think his original idea was to mass produce a 30 grand car that had high performance. So basically, the performance of a Porsche, but stripped down to the basics, sort of Lotus type thinking, and it drives really well. But this EV version, he wanted it not because of the environmental, but because of the torque.
Right. Just sort of a speed freak.
Yeah.
It does sound like crazy acceleration for public roads.
It's no one wants you to drive irresponsibly. That's not the point of this. It's the art of what's possible. I think that's where he's coming from.
Right. Yeah, it sounds like quite an interesting project indeed. I do get a comment from AJ saying, "Short Tesla, what? I have a Tesla Powerwall battery on my wall that's taking charge from my solar system right now, guys." What would you say? What would you say to AJ, Charlie? Do you think because it's not just cars, of course, that Tesla does. They're all about the batteries and the power walls, and he's all about building tunnels under major cities and all the SpaceX stuff. Do you think there's maybe some extra magic that he can conjure up that will keep the stock going?
So, I mean, what Tesla are doing is great, all right? And so I understand that. I might even buy one of those. I mean, it sounds quite fun to have all this stuff. Does that make it a good investment? So I love the way you just mentioned the Boring Company and SpaceX. Tesla shareholders do not own SpaceX, and they do not own. Okay? They own
completely different.
Right? So the fact that he's cool doesn't make the Tesla valuable.
That's true.
Yeah. And we're talking about his valuation here. It's astronomical. And in a world where valuation is coming back to normal, why would you assume that fun that he's enjoyed in the last 2 years will last forever? And it's a manufacturing company with a kind of software multiple. It just doesn't make any sense. And one of the reasons why I think he wants to buy Twitter, and I hope he does, frankly, because it'd be great for crypto, is because it's kind of his marketing tool.
Yeah.
He famously spent no money on advertising in the whole history of Tesla, and yet it's a world everyone knows what a Tesla is. It's a global brand, and that's come from his Twitter account, where he has 84 million followers, and he's been ghosted on Twitter. There's a website you go to where you find out whether you're in trouble on Twitter, which I found out I've been ghosted. I've never said anything offensive on Twitter ever.
Have you been shadow banned?
I've been shadow banned. I don't even know why. Maybe it's because I've written about Bitcoin too much. I don't know why. And there's no transparency. He's been shadow banned. Yeah. And so it's a funny old world where you kind of think this is this global town square platform, as he calls it, and you're being shadow banned and you're not even being told until this website recently appeared telling you where you can search your account. And so I think he probably feared being banned. And that's his global marketing strategy.
Yeah.
So he needs to win it. But the problem is, of course, I was telling you that Tesla shares were squeezed up because there was a lack of Tesla shares and there was a forced buyer, massive billions of dollars forced to buy Tesla shares. So the more Tesla shares he sells, the more he unlocks that gamma squeeze. And the more supply of shares there are on the market, to freely trade, then the less the shares are squeezed higher by the index funds.
Right. Yeah. That makes sense.
Selling shares, long-term strategic shareholders selling shares is not good for the Tesla price. Not just because of the obvious, more buyers than sellers. Not just because of that, just because there is stock out there, and then suddenly you can find its true price. So I think there's been a forced high price. And look, I think Tesla's a great company. I think he's a hilarious bloke and an innovator, and he'll go down in history. All of that. But the investment case for Tesla is extraordinarily weak, and it's extremely high risk.
Well, I guess so as a rebuttal to your earlier point, yeah, Boring Company is completely separate. SpaceX is completely separate. And indeed, all of his ventures, they're quite well siloed. But he's never had an issue with taking money from one to then inject into another one. The whole Solar City saga, which Tesla ended up buying because it wasn't making any money, was never a big problem. And at the same time, why can't this continue? Well, millennials don't seem to. Millennials think Tesla, like Elon Musk, is going to save the world. And there are all those videos on how to buy extreme out of the money calls on Tesla for teenagers, and maybe he'd be able to create another gamma squeeze. He'd be able to pull off another one of these when he's in control at Twitter, if the Twitter deal does go through, because it's not totally in the bag yet. I mean, Charlie, do you think, given how far he's managed to pull it along, do you think that there's maybe there's just one final hurrah that he could push through?
I think when you're worth $1 trillion, which only a few companies in the world are, less than what, 5, something like that. Saudi Aramco and the leading FANGs, that's it. And I don't think there are any tricks you can pull when you're at that number. I think you can pull tricks when you're at 20 billion, 50 billion. They'll give you the benefit of the doubt, but when you're at that number,
all out of tricks.
You're out of tricks.
Because Charlie, you're saying earlier, all about momentum, and a big part of, one of these big tricks of Musk's has been in order to become really big in the internet indexes like NASDAQ, and they get that passive money coming in from all of the very popular passive index trackers. Is there a limit to how much momentum you can get out of that?
The momentum indices responds to what happens. I don't think you can manipulate them, other than you can manipulate your share price and hopefully get a trend, and they'll pick up on that. But they've done that. You can't do it again. Right. You can't have your stock go up 10, 20 times, and then repeat that trick. I mean, I don't know how you make $1 trillion stock worth $2 trillion without proper profits. I just don't. I think all of it's a big illusion. And so he puts pictures of space rockets up and puts, mentions the Boring Company or buys Twitter. It's all about sort of keeping the whole thing going.
Yeah.
And notwithstanding the fact they do great things, yes, but it's just the wrong price. It's just straightforward equity analysis. There's no way a car company could be worth that. I mean, even if they had made every car in the world, you could just about justify where they are if all the other car companies went bust, sort of thing. It doesn't make any sense on any traditional metric. And you may say, well, traditional metrics need to change. Well, that's what they said in the late 90s. Yeah. So they don't. It always comes back to that. History, this repeats. It's a different story each time. but it's just madness. It doesn't make any sense. So I think Tesla is probably a good car, terrible share.
Right. You do get the impression that it's almost like, Musk is at this high stakes poker table and he keeps winning, but he's just never allowed to leave. He has to just keep raising the stakes and keep playing.
Very good.
Do you think then where you talk about negative negative leadership earlier, where does the Tesla stock fit into that? Is this one of the ones that will be one of the last to fall in case we get a big tech bear market, or would we see that earlier?
In normal times, there's always a company that does badly, right? It's when the list grows and grows and grows and grows. That's when you've got a big problem. And I think that's what's happening today. We've got more and more companies joining the dunces list. And I think Tesla's itching to join. And funnily enough, the Twitter bid when people saw the financing was largely based on his, the collateral of his equity stock. Then I think a lot of the professional short sellers, saw a vulnerability there and said, okay, because he's going to. So he might not be a seller today, but they can smell it in the future. It's ruthless. Right? The markets are absolutely ruthless.
There's blood in the water now, and they're finally going to get him back for all of the scalps he's taken from the short sellers over the years.
I would think so.
Yeah. What do you think of then the Twitter story and the Twitter share? Where does it fit into all of this?
Well, he's bid for Twitter, and I've read some comment from some people. The establishment say that he should focus more on the business model and less about reforms to the platform, but they would say that, wouldn't they?
Yeah,
I totally disagree with that. I think the Musk style was make the platform great, and the profits may turn up later, and that's worked from in the past. And that will probably work again. But I think that I'm really happy about the idea that it's going to be de-woked, because I find that the most frustrating part of these platforms. I don't want the hate speech. I would like to see more real people on Twitter and that sort of thing, real identities. You get better behavior out of people that way. But if someone like me is going to be ghost banned for not doing anything wrong, not even being told what I've done wrong. Do you see me as a terrible person on Twitter? I just talk about gold and Bitcoin and what I think, and I don't mention politics and this sort of thing. But
there was a response. I remember there was a front cover of Private Eye that I remember you responded to on Twitter, with maybe there was the comment made had irritated one of the Twitter. The Twitter gatekeepers, perhaps. I don't know.
On that note, what was the best ever cover of Private Eye?
Best ever cover of Private Eye. Oh, yeah. It's bombshell. It's like bombshell leak of when the Hutton report is going to come out, and it's Tony Blair on the phone, and he says, "How about never? Never's good with me." But that would be my favorite, Charlie.
Well, my favourite was the SAS Gibraltar killings.
This is the one I'm talking about. This is definitely what got you shadow banned.
Two blokes in balaclavas with machine guns, and one says to the other, "Why did you shoot him 22 times?" The other says, "I ran out of bullets."
Yeah, see, it was that exact cover that I was thinking of. I think that's why you got tagged for shadow banning, Charlie.
I mean, it's just funny.
Yeah, I know. So, but the high hegians at Twitter, I guess, have they've decided that some things you can't joke about, etc. Do you think, like with Twitter and with this sort of change in ownership? I mean, as you say, the establishment has taken a line against it that this is something you should just focus on the business model. Do you think we might see a similar kind of change take place with other takeovers, and you get this sort of change in moderation in Facebook with Google's policies because they have their own versions of shadow banning? Do you think this marks a change in the waters?
Well, someone leads, don't they? Someone does it first, and then the others will assess, and then the rest will follow.
Right. Well, let's hope so.
It's a funny old one because the BBC want to be politically neutral. Twitter, Musk said I want to be politically neutral, and the BBC want to be politically neutral. And people don't think the BBC are politically neutral because the right are pissed off and the left are pissed off. But that's the Musk point. You're going to piss off the left and the right if you're politically neutral. But the platform doesn't need to have a view. That's the point of a platform. You just need to stop people being nasty and killing people and stuff. That's all you need to do. And just sort of manage behavior really rather than views. And I think that's probably what's wrong with the whole thing. I don't actually like Donald Trump, and I thought the whole thing was amusing at times, but actually on balance he's a bit of a nasty character. And banning a serving president, I just think there's something deeply wrong about that.
It does seem quite extraordinary at the time, and you can't really imagine them doing that had he been a Democrat. But that may just be my own biases speaking there.
But it was also just ahead of an election and all this kind of stuff,
Yeah,
but so it goes to the heart of democracy and the things that are really important. But no, the US, the worst thing they have is they always have two terrible candidates. I don't know why their $1 billion election system ends up with two terrible candidates time and again, but it seems to, doesn't it? And it's bizarre how that keeps on happening. Certainly in the last two elections, and I think Trump's a bit of a nasty piece of work. But I suppose, slightly in his credit, he didn't deploy the military in his short tenure. Was that a good thing not to deploy them? Maybe that made America look soft. So who knows?
Yeah, it'll be interesting to see whether or not he gets reinstated. Maybe this Musk takeover is a reaction to Trump's banning in a lot of ways. That you do see somebody who finally sort of takes the other route. There is the rumor that Peter Thiel was the partner with Musk in this takeover, and Thiel, of course, has some very strongly held political beliefs regarding free speech. I do see that there is, in the Facebook stream of this, we are getting some spam from somebody pretending to be Southbank investment research, saying that we'll be giving away 20 Bitcoin to people who are listening. I'm afraid that is definitely spam, folks. Do not send that Bitcoin address any Bitcoin. I'm afraid you're not going to get anything back. AJ asks, kindly explain to me, what is shadow banning? Well, this is something that was claimed to be a conspiracy theory for a very long time by the people doing the shadow banning, probably. But this would be where if you post something on social media and people who follow you wouldn't see it. So it'd be almost like you're being put into a padded cell, but without you knowing it. So all of your tweets and all of your responses would not be notifying the people that you were tweeting to or who followed you. And this is something that, as I say, it was claimed that this didn't happen. It's just these algorithms. That's just the way they're set up. Sometimes things don't trend, and then it's kind of revealed over time that maybe some people were shadow banned, and that's what the shadow banning thing, I guess, is. Yeah, Charlie, we have gone a little over the shop with some of our topics here, but we do have 12 minutes left on the clock. It would be good to get some broad insights on the crypto space once again, if you could. As John T comments, don't forget Bitcoin, which we should not. What's your thoughts on this? Because there has been such correlation with tech and with Bitcoin for a very long period of time, as we've been saying so much during this conversation. It's not a good time for tech. What does Bitcoin do in this scenario?
So I think I love Bitcoin, and I've loved and hated it over the years. I started following it in 2012. I didn't buy it till late 2013 at nearly $1,000. I didn't buy very much. I only bought a very small amount to test it, to play with it, to learn. And I made a substantial investment in 2015 at sort of 250. Having done my research and so forth.
You bought a boat, if I remember, with some of the proceeds.
I do. I built my office, but all sorts of things, and that was great. But and I sold a bit early in 2017. But it was a great trade, but But I didn't buy at $1 and still have it today, which is what, when you talk about Bitcoin billionaires, and to have Bitcoin, I have a little bit, not a lot. But I built a business around it. So my big investment in Bitcoin was Bytree, effectively, which I devoted my life to the cause in that sense. And the thing I really like about Bitcoin, it was my view 8 years ago was there'll be a winner, there'll be an AOL, and there'll be a Google. And I kind of assumed when I first started looking at it that Bitcoin would be superseded. A lovely idea, be superseded. And I've just been proved wrong for quite some time. Even though I like Bitcoin, I analyze Bitcoin, but the competition never came, and that was because for the very thing I was writing when I first discovered it in 2013, it was a network effect situation, and no one has overtaken the Bitcoin network, and I don't think anyone ever will. So I've really come full circle on this. This is why I've started talking about it in the Fleet Street Letter, having previously parked it in a portfolio called Genepi, where we're going to have a sort of fun trading strategy, buy low, sell high, which did really well, by the way. And now it's actually going to become part of the system. So it's an upgrade in my mind that Bitcoin's real and it's here to stay, rather than it's great fun and you should understand it and crypto's here to stay, but Bitcoin may or may not have its dominant place in that. And I now wholeheartedly believe Bitcoin is number one and forever will be number one. And Ethereum might do more. That's number two, by the way, if you're not a big crypto person. But the problem with Ethereum is it's got loads of competitors.
It does, yeah. Level ones.
And the new ones are being born every day. So it's going to get eaten alive at some point or slowly over time. Yeah. So it could be that Ethereum's actually the AOL. But Bitcoin is the sort of, is it the digital gold sort of thing? It's not a great analogy, but it's not a bad one. But it's got the network. And the simple point is that all the value's in the network. The value's not in the code. The value's not in the computing and all that. It's in the network. And what do I mean by that? Well, a simple idea that we could go and take a company like Coca-Cola and we could go and buy it. Yeah, we could buy all the shares and we could own Coca-Cola and we could live off the dividends, and it'd be fantastic. Boaz, you and I, we could go to, I don't know, some nice island and just live like kings with Coca-Cola dividends coming in and all the other trimmings of that kind of wealth. But if we bought all the Bitcoins, and the valuation, we're talking about hundreds of billions, so same sort of thing. If we bought all the Bitcoins, we'd be really stupid because there'd be absolutely no value. By the time we bought the last Bitcoin, there'd be no value whatsoever because we'd have destroyed the network in the process. It's a very serious, amusing story. It's a very serious point. And this is why the Bored Apes Yacht Club, when they do their airdrops, so all these crypto projects, they try and give away stuff because they're trying to build networks. They're trying to get the crowd interested. So if you can get 10 million people to have a little bit of your thing, then they're interested, they engage with it, and suddenly you're off. It's a bit like having, what would you pay? What is Elon Musk's Twitter account worth? With 84 followers, right? That's not a zero value, is it?
No.
Would he swap mine for 6,000 followers for his for 84 million? No, he wouldn't. So there's clearly a value to a network, and that's just one illustration. There's so many illustrations of this, and so that's what society is doing today. It's an intangible, like a brand is an intangible. But it's there. It's a real value, and so Bitcoin is kind of really the leader in that, and it has no competition because it's won the network effect as a default monetary asset of crypto. The other stuff has to prove itself because it can't win that battle. It's got to go find another fight, and in the case of Ethereum, that's utility. So how do I host US dollars, host NFTs, these sort of things, and the reason Ethereum is so valuable is because, for example, we've got some stable coins. So I had to send some stable coins, some US dollars on the blockchain a year ago during the hype of the cycle. And I'd run out of Ethereum, run out of. I was not investing in, I'd run out of it to use it because it's like buying a postage stamp. Now, at that time, to send my US dollar stable coins would have cost me $80, $80. Yeah, which is not cheap. That is not cheap computing. A lot of money, right, to make a transaction. Fixed fee, whether it was $1 of US dollar or whether it was $100,000, didn't make any difference. It was $80 fee to use the blockchain. And Ethereum's now going to go from a proof of work to proof of stake at some point to tick the ESG friendly box. I'm not going to bore, I'm sure that conversation will come up another time. But basically, it makes it, a crowd pleaser to the ESG lot. And the fees will hopefully come down significantly. Does that mean that the demand for Ethereum will also come down? Because that day I wanted to send stablecoins last April and I'd run out of Ethereum. I actually had to go into the market and buy a couple of $100 worth of Ethereum, not because I wanted to invest in Ethereum, but to send my dollars.
Yep.
Yeah. So that was a real use case. Why was I buying? Because I wanted to do something on the blockchain. Now, if the fee goes down, then is that good for Ethereum? Well, yeah, you could say it could have more adoption, but maybe there's less demand for Ether. So, if the fees come down 50%, is the network going to double? I doubt it. If the fees come down 95%, is the network going to grow 20x? I doubt it. So I think making Ether more efficient might actually make it worsen the use case. And so on a risk-adjusted basis, would you not be better off buying something with 100th of its valuation that's trying to snap at its heels?
Right.
So if you can find a good project that's trying to do what it does, cheaper, better, faster, classic internet, you may as well, right? Because you've got upside and they've got downside. So, yes, it's a big project today, and yes, I like it, but I'm just posing a question that Ethereum has competition, whereas Bitcoin doesn't.
Yeah, the likes of Cosmos and Solana, and and there are a few other level ones out there, which are all trying to be a better Ethereum in a lot of ways. Charlie,
when you see a $1 trillion prize, how many bright kids will get together and say, we can do that?
Yeah. On that note, Charlie, with level ones and that ecosystem, what do you think happens in an inflationary environment? Because Bitcoin is not the same, as we've already described. What happens to number 2 and number 3 and number 4 in this inflationary environment we're now in? Does can these networks still expand and acquire lots and lots of value in this kind of environment, or do they get hurt as well?
The key is the alpha. So there was on I didn't put this in Fleet Street, I put it in Byte last week, and there was a note from I will put it in Fleet Street this week. There was a note from Man Group that they studied all the inflation eras in history. A really good note, kind of high level, but if you put your mind to it, I'm sure everyone will get it. And he said what worked in the past, and obviously commodities came up as pretty good, gold, that sort of thing, but the best equity strategy was trend following. Yeah. And this wasn't relative strength, this was trend following. And because you're just locking on to stuff that's working. And so this idea of believing the trend in an inflationary environment is a powerful idea. It's been proven to work in history, which is why I get it. You don't buy the dip. You don't aggressively do the whole V-shaped correction, this is the low, in quite the same way in an inflationary troubled time as you do in a bull market.
Right.
Yeah, bull market, leap of faith is not a bad strategy. In a bear market, it's a dangerous strategy. The old expression is, you don't catch a fall in life because it cuts your fingers off.
Yeah.
And so it reiterates this idea of what's doing well is worth backing. Yeah, particularly during inflationary periods, and so I think we've got to respect that idea. Now, a crypto that is mispriced because it got to where it did on 2021 hype, it's probably corrected a lot in the last few months. Yeah, so you had most of those projects that weren't very good are down a hell of a lot. It's kind of, I think, a good time to start hunting around for the next round of winners. And the market's going to be ruthless. When the level of speculation is quite low, and there's a lot of false sellers about, the market's going to be ruthless. And so anything that can outperform is going to have, that's going to be an interesting signal to some extent. And so that's really my journey there. More buying than Fleet Street. At Fleet Street, which is what I should be talking here because it's a Southbank conversation, we're focused on Bitcoin because I believe that it's ready for that conversation. You know, I don't put small caps into Fleet Street letter. It's large caps, ETFs, it's bonds, equities, gold. It's, you know, it's the real deal. It's proper. It's what you get from a private bank. It's that kind of portfolio, and it's a good portfolio. And I put my best efforts into it. Trying to keep it simple at the same time. You know, I could put lots of bells and whistles on it, but people would just scream at me if I did.
Yeah.
Derivatives here, there, and everywhere, but no one wants that. So we just keep it simple asset allocation and simple stock selection. But I don't think crypto is ready for the Fleet Street letter at all, and I don't think Fleet Street letter readers are ready for crypto. But I think they are ready for Bitcoin, because I think that's proven winner, and we can now treat that as a proper asset. And this is important because in 2014, 2018, when the stock market went down a bit, crypto absolutely collapsed. Bitcoin absolutely collapsed, down 85%. 84%, and it did better on the rallies. But what we're seeing this time, and it's always been correlated with tech stocks and so forth. What we're seeing this time is Bitcoin going down 1-for-1 with the Nasdaq. Yeah, it's not worse than the Nasdaq. Now you might say, well, the Nasdaq's down 20%. That's bad. You go, well, not really. It's okay. It's a tech situation, but on the rallies, wow, it's going to do 2 or 3 times better. So we call that asymmetry. So you're taking the same risk. Let's say you own the Nasdaq. And I'm saying if you own the Nasdaq, I'm saying sell the Nasdaq, buy Bitcoin. You're going to be better off because the bad days are going to be as bad, or the bad months are going to be as bad, but the good months are going to be 2-3 times better. So take the rough with the smooth. That to me is investment asymmetry, and that is financial magic. Which is not to say you can't go down. It's that you're going to be better off in this thing than in that thing. So my personal view is the tech trade's over. It's run hard, and part of the crypto movement, we destroy those monopoly tech platforms. That's a small part of it. That's another bonus from the whole thing. But Bitcoin has got a lot of potential as a very serious off-grid asset, and it cuts through cultures. And I think this is also very, very. It's the network effect. We've covered that, but it cuts through cultures, just like gold. Everyone loves gold. No one, not as an investment. Not everyone likes gold, but as a metal, as a with rings and things, and who doesn't like it? Everyone loves it. It's shiny. It's beautiful. Everyone loves it. All cultures. And I think Bitcoin increasingly is heading that way. So something that's got global appeal. That's so if you went to Nigeria and said, I want to talk to some Bitcoiners, you'd find some fascinating people, just as you would do in Ukraine 2 months ago, or in Moscow 2 months ago, and people a bit shy today, I suppose, or in Latin America. But go anywhere and you will find enthusiasts for this movement. And it's not a Ponzi scheme, it's not a pyramid scheme, it's not a bunch of idiots. It's actually the brightest people in the world have come to this space. All the young brains are coming here, and the old farts that don't get it. That's their fault, and that was the message I was trying to politely say to this audience I saw today at lunchtime. If I come back here this time next year and the first question is, cryptos are relevant in the future, 8% vote, and I said, well, if you 8% are still saying that, are you doing your job properly? Are you not investigating where the world's going? Were you saying that about internet stocks in 1999? Yes, 99% are going bust, of course. But the 1% will be important. And the 1% of internet stocks that survived and the other ones that came along, as you know, have become 1/3 of the world index. Now that trend has probably ended, but to have known a bit about that over the last decade would have been pretty useful information, wouldn't it?
Certainly. Charlie, we have come to the end of our time for this week. Are there any closing remarks you'd like to leave with our viewers for this episode?
Well, I'd like to wish people a happy bank holiday weekend, which I started one day early. But if people know what I've been through personally in the last few months, they'd probably say you deserve it, but not Viveka. But
you certainly do, Charlie. And congrats on the launch of the ETP in Switzerland.
Yeah, thank you. And thank you, Boaz, for your time. And sorry about the connection, ladies and gentlemen. Maybe Welsh devolution will help.
Well, there you have it, folks. I hope you enjoyed episode 41 of Southbank Live. Slightly quieter chat this week. I apologise for some of the connection issues, but of course we are both in Wales, and sometimes the internet isn't always the best here. Do tune in next week. We shall be continuing as usual, and this time David Martin will actually be appearing. In the meantime, if you are interested in learning more on the crypto side, there will be a link in the description to Sam Volkering's latest. What would I say? The latest venture with Nigel Farage on the crypto space, which you may be interested in following up on. That's all from us for the moment. Hope you enjoyed it. If you're watching a recording, do give us a subscribe and like, and we'll see you in the next one. Bye-bye.